Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey trading friends, checking in on the S&P 500 and broader markets. Significantly weak day. We have clearly undergone a sentiment shift, a momentum shift, a cycle shift, and the bears have come out to play. So there's a lot to be looking at in the bigger picture. For me, I'm focusing on two time frames: the hourly downtrend, which is my guide for swinging my SPXS position from Thursday, which I am still in, and the weekly uptrend. So for any individual name, those are the two time frames that I'm looking at right now. So what do we want to talk about? A whole lot of stuff. I'll talk about my personal trades in just a second because I'm trying a new style that is working with my conviction of holding these swing trades longer term, knowing that I'm going to have to sit through bounces. Let's start that out right now. So for me, my problem is running the chart guys, running the chat room, live streaming multiple times a day. I'm always in front of the computer and I see bounces shaping up on the hourly time frame. So if I say to myself, I'm going to hold SPXS as long as we are in a downtrend on the hourly time frame for SPY, I know that I have to sit through hourly oversold bounces and watch my account value drop. I don't like that. So what I have been doing today, most notably, is getting into positions where I would enter SPXL while holding SPXS, because SPXS, the bearish ETF, I'm basing it off the hourly time frame, and I was entering SPXL trades based on the shorter term time frames. So what I did here at the end of the day, just an example, is I was looking at this setup for the support to hold here and a bit of an inverse head and shoulders setup, and I ended up entering. I was a little bit later than I wanted to be, but I saw this little 2-minute lower low with no follow through, this green candle, and I said, all right, I'm entering SPXL and I'm putting my stop under this 2-minute low. Very low risk. If I'm wrong and I stop out, I take a small loss on SPXL and my account grows because of my SPXS position. If I'm right, in this instance, my SPXL position was greater than my SPXS position. So I made money even though my portfolio was all gold, GLD, and SPXS. My account value went up on this bounce because I had a bigger SPXL position. I exited it before live streaming at the end of the day so I could focus on things. I used this 2-minute volume climax as my signal to exit, and then the account continued to grow at the end of the day on this pullback. So it might be counterintuitive for some people saying, why are you holding bull and bear at the same times? It's the difference of time frames, and for me it worked really well today. I'm going to do it more to keep conviction on longer term trades while still capitalizing on short term volatility. So we had the 5-minute downtrend on SPY. We had the gap down open for buying first thing. Brokers were really slow. We could anticipate that was going to be the case because we knew it was going to be a big volume day. And I ended up trying to enter Tesla right at the open, and Fidelity rejected my order. And there were a lot of issues on a lot of brokers. But we ended up with a 5-minute higher low bull flag attempt, fail the high of the day, loss of support. We never saw a 5-minute higher low and higher high the entire morning, the entire afternoon, until pretty much after 1:30. So that means we had 4 hours of 5-minute lower highs and lower lows all morning, which again helped keep my conviction as a bear, knowing that we were still in a very clear hourly downtrend. So I will continue to hold SPXS as long as we are in an hourly downtrend. I personally am comfortable buying extreme dumps when daily RSI is oversold as well. And if you remember the end of December 2018, where I was scaling in and buying that dip, it's because the daily RSI was so beat up. So I'm not ready to go bullish and look to buy dips yet. The hourly RSI is out the window for me. I don't care what the hourly RSI is saying. It's proven to me that it is no longer useful in this current market cycle. The previous market cycle, hourly RSI in the 20s, mid to upper 20s, was a great buy signal. But we know that that's out the window now because this is not the same market environment that we have been trading in the past few months. This is now most comparable to the end of December 2018 dump. So if you want comparisons, how did it play out then? What did gold do then? What did the volatility index do? That's where you want to be comparing to. We are still in a weekly uptrend for SPY. This support level of 320.73 is the level that the bulls must hold. We ended today with an hourly lower high being set and a weak close. Bears would love another gap down open. It's all about 320.73 tomorrow. If that level holds, we're then going to be watching for a head and shoulders for all of the next couple of weeks. If it doesn't hold, we lose the weekly uptrend for the first time in 14 months, which is a notable shift in the market. If we lose the weekly uptrend, I'm going to zoom out and watch the monthly uptrend, knowing that anything above 284.82 is a monthly high or low, and we're not anywhere near losing the monthly uptrend at this point. So short term, the hourly downtrend is guiding my current positions, not GLD, we'll talk about it in a minute, and longer term, 320.73 weekly support is the most important level. A lot of individual names today formed the low of the day, the high of the day, an hourly high or low, and then an hourly lower high. Some names like SPY and the financial sector dropped to lower lows. So it's important to distinguish who formed an hourly high or low and who dropped to a lower low in the middle of the day. We can make a list. Names that have the higher low on the hourly are stronger than names that don't. So that's my current game plan. I will be looking to buy dips in this market pullback. If we gap down open tomorrow, I'll be interested because the 4-hour RSI will be down in the teens. The daily RSI will be close to oversold, but not there just yet. But I'm being a little bit picky as a bull. It's time to be a bear for me personally. It's been a long time. IWM, 160.03 is the weekly support level. And the difference here is a break of 160.03 would then confirm the weekly downtrend. If SPY breaks 320.73 support, we lose the uptrend, but we're not confirming a downtrend yet. If we're going to confirm a weekly downtrend, SPY has to, at some point, bounce, fail the all-time high, and then drop to a lower low. IWM is already looking to do that. High, low, lower high, and if 160.03 breaks, we are then in a weekly downtrend. So that is the key support level. Hourly resistance. High of the day did break at the end of the day, but only by 8 pennies. That's a double top. Bulls would have to hold the low of today and break the high of today to change the hourly trend tomorrow. When we change hourly trends, we zoom out and we look for a daily lower high to be set on the bounce. TradingView has some of these big upper wicks on these daily candles. We have to ignore those and zoom in if we want the actual high of the day. QQQ held up better than the financial sector today. Low of the day, high of the day on the same starting candle. Higher low, we didn't drop to a low of the day. Lower high, hourly equilibrium to end things. Whereas XLF, hourly lower low, was very clear. A couple times today, I used XLF and QQQ as a bit of a visual guide to say, okay, are the bulls going to be strong on this bounce? Are both of these sectors breaking their high of the day? And first thing this morning, XLF had a double top that was the first initial little red flag. It ended up breaking it eventually, but clues to be gathered by watching how these two sectors are interacting with each other. And clear hourly lower highs on XLF. XLV, all about 98.81. That is our weekly support. It will be a double top and a loss of the weekly uptrend if that level breaks. So just like IWM, XLV has the potential to enter a weekly downtrend, all about 98.81. Another factor, is this all coronavirus or is this Bernie gaining as the front runner in the Democratic Party? Doesn't matter. It's both. And the price action is what matters most. The headlines definitely spiking some fear with coronavirus, but without a doubt, the more likely it becomes that Bernie Sanders is going to be A, the Democratic candidate, and B, has a potential chance to win the presidency, the market will start pricing that in months in advance before the election. And there are trades that we can make based on who's going to win. If Trump's going to win, the market's likely going to respond bullish. If Bernie's going to win, we're going to look to short the biotech sector. We're going to look to go long the MJ sector. There's going to be all kinds of plays, but that is 9 months away at this point. Too far enough for me to care about. We could all be dead. XBI, loss of the daily uptrend, weekly time frame. Anything above 88.05 is a weekly high or low. Bulls have a lot more space above this weekly support level than a lot of other names do, but it does have the double top as well. Double top by 3 pennies, must hold 88.05 or it is a clear shift in momentum. SMH, 136.96 weekly support. Look how many of these major sectors are right on the verge of their weekly support, trying to battle to defend this weekly uptrend while bears are trying to knock that uptrend loose. 136.96 hourly time frame, high of the day, double top at the end of the day, and back down towards hourly support, tightening hourly equilibrium. The VIX, huge day and a fairly strong close. Hourly uptrend still intact, hourly higher low of 22.90. Bulls need to break 26.40, and then we're looking back at December 2018 levels, 36.20. We changed the weekly trend, higher low, higher high, took out a bunch of short-term levels or levels over the last few months, and now it's all about December 2018 levels. There will be an opportunity to short the volatility sector, just like there'll be an opportunity to go long stocks eventually. Just not sure we're there yet. Gold, big bull move, volume climax, big upper wick. We've seen this before. This was on a Sunday when this happened. This is a Monday. 4-hour uptrend still intact. Exponential 12-period support still holding. If we lose the 4-hour uptrend, we zoom out and we look for a daily higher low to form. Tons of space for the daily and weekly uptrend. My GLD position long term is based on the weekly uptrend. My stop is under 1547, and I will move it up if we set a weekly higher low. Gold on this move has come within 14% of all-time highs. It's going to be a race to see who can hit all-time highs first, gold or Bitcoin. Silver, big upper wick, 4-hour uptrend intact. Lose the 4-hour uptrend, we zoom out and look for a daily higher low to form. Who's stronger, gold or silver? The answer is gold. Although we did gain some ground for silver at the end of the day. But what we have here is a bear break with no follow through, a bear break with no follow through, which is keeping the gold bulls comfortably ahead of the silver bulls at this point. That being said, that's also a double top now. So we're going to look for a tightening range. Let's see what the 12 hour is doing. Whatever time frame you find the most clarity on, we're looking for a tightening range to dictate short-term direction on who's stronger of the metals. Bull miners, huge gap up open, lots of profit taking. We're in an hourly downtrend. Low of the day was our hourly higher low. We failed to break the high of the day, and then on increasing bear volume, we dropped to a lower low. So NUGT, which is inversely correlated to SPY, is weaker than SPY. Today it's inversely correlated significantly, but that hourly downtrend, while SPY is not in an hourly uptrend. That's a notable difference. The long-term resistance of 45.10, we want to look at the non-leveraged ticker of GDX because time decay is a factor. Why does that matter? Look, 30.96, we broke it. NUGT didn't come close to breaking it. That's time decay at work. That's why you always want to be charting levels on non-leveraged ETFs. There are many times where I will trade a leveraged ETF based off of the non-leveraged levels. Oil bounced right when SPY bounced today, significant correlation on the bounce, and the bounce was stronger. It was a V-shaped move, whereas SPY started V-shaped, it had a little hourly or a little 5-minute higher low and then continuation. The oil move was just bulls. But we're still in an hourly downtrend. We have broken some hourly resistances, but we must hold 50.43 and break 51.65 to change the hourly trend back to the bulls. Natural gas, looking for a daily higher low to form. No sign of it at this point. Anything above 180 is a daily higher low. Hourly trend change has to take place. We had an hourly equilibrium, a bear break with no follow through. Bulls have to break 1865 and 1884 for the daily higher low to be set. That's where we stand in the overall markets. Come join us in the chat room if you want to talk about markets. Today was a very fun day. I love live streaming on days like today. Lots of discussion going on. Thanks for tuning in. Do good things. We'll see you tomorrow. Have a good day. So I converted my dining room into a grow room because who needs a dining room these days? So I installed a light, and so far I'm starting peppers and celery and tomatillos and eggplants. Tomatoes will come next. Got to start some flowers soon, some yarrow and some lavender. And I might install another one up here. And that way in the winter I can grow stuff as well. So about 2 weeks ago there was one lone frog out here croaking by himself. And I ended up putting speakers out here and putting some other frogs on for him because he was clearly early and alone. But he found somebody because that is a big sack of frog eggs that will eventually turn into tadpoles in a couple weeks. And we'll see if they're able to survive in this moving water. Last year I didn't see any tadpoles in here, but there were also chemicals in here last year, which I have stopped using. Some early flowers. This elderberry is getting its first leaves on. Shout out to Chart Guys members Jungle Funk and Joshua who came over and stayed for a week and helped me plant a bunch of these bulbs, so they're all coming up around the walkway. And we did this whole patch overlooking the pond as well, and some of these are starting to come up and flower really early.